Welcome back to Coffee and Coverage. My name is Nicole Carlson, and today we are being joined by Jen, who is one of Pinnacle Employee Benefits benefit consultants. How are you doing today, Jen?
Great. How are you?
Doing good.
Great.
All right, so some new topics we're going to touch on today. The first one being the current open enrollment. So open enrollment did end December 15th for a January 1 effective date. And now there's kind of an extension, if you will, right? So what is the new open enrollment ending date, and how would that work for everyone?
Okay, so you still have time to enroll. If you miss that deadline of December 15th, you have until January 16th to come in and pick a plan on the marketplace to get your subsidy. And it will have a February 1st effective
So February 1st.
Mm-hmm.
Okay.
Yep.
So now that we're past the original open enrollment period, you do have till January 16th, but that gives you a February 1 effective date. So that's the new open enrollment guidelines, I guess, right? Okay. Mm-hmm. So let's touch a little bit on marketplace versus off marketplace. How would you explain that to someone?
Marketplace is the on exchange is kind of what it's called. And so it is a tax subsidy that you have that you can apply for to see if you qualify. And it's based on your income, your dependents, where you live, just all these different things kind of go together to see how much you would qualify for. And it helps with your monthly premium payment for your insurance, so it's a little bit cheaper and more affordable to help you out.
Okay.
So, and the on exchange or off exchange, is direct full premium price. So if you
directly through the
carriers.
Yep. So do you know, off the top of your head, are there any income limits for the marketplace center? How do they calculate that portion?
Well, it's based off the federal poverty level, so it's really hard for me to say, yep, it's $20,000 for a single 21-year-old. So best option or best way to figure out is just call our office and we can run a quote for you and see if you qualify.
Right. Yep. Yeah, so basically, it's all dependent on where you live, your household size, your age, obviously your income, and then they determine based on that what the tax credit would be, right?
Yep.
So very cool. Okay. So now if someone were to go uninsured, how would that affect them?
Well, then you would be paying full price for all of your health care, which could cost you a lot of money.
If you end up having an emergency or something crazy.
Yep.
So, obviously, if you have a chance and you can get in, or even just give us a call before January 16th, hopefully we can help prevent that and prevent some major bills for you in the future. So, okay, one other thing we're going to briefly talk about today is a PPO plan versus a networked policy. So as an example, this year in our area, we have the new Dakota Blue policies, which means it's a networked directly with Trinity. Mm-hmm. Can you briefly explain maybe the difference between the two?
Yeah, I'm going to kind of cheat here and use my notes just because I want to make sure I get it right for you guys. So the new Trinity Dakota Blue plan with Blue Cross Blue Shield, it's a 4-tiered system for your deductibles. So you have a preferred network, which is your strictly Trinity providers. You have to stay within that Trinity bubble per se. Yeah. And then once you go outside of that, you're going to have a different deductible to meet. So that's the enhanced one, because it's any of the providers that accept Blue Cross Blue Shield in North Dakota.
But not at Trinity.
Okay. So if you walk to the Sanford walk-in clinic, they accept Blue Cross Blue Shield, so it'd be the enhanced deductible that you would be paying. Then you go, the third tier is a standard network, which would be any providers accepting Blue Cross outside of North Dakota. So that, again, is a higher deductible than what the preferred would be. And then finally, the fourth tier would be the non-participating, and that's any doctor that does not accept Blue Cross Blue Shield. Then you would be stuck paying full price pretty much because you're basically uninsured. Okay. If you did have an emergency, you would go to any provider for the emergency service, and it would be covered at the preferred tiered level.
Okay. So if you're traveling and you're on vacation and there's a true emergency and you end up at the emergency room, you would still get your preferred tier. Yeah. So that's nice to know. So then what would be the difference for a PPO network then?
That is a broad network, so you can go to any provider then that accepts Blue Cross Blue Shield, or and then you're set on your deductible. You don't have
one, whatever the plan looks like that you're on.
Versus the tiered.
Okay. Yep. Very good. So that concludes this episode of Coffee and Coverage. Just remember, coffee is optional, coverage is not.